How do millionaires make their money? I've seen this broken down in any number of different ways, but when I look at a lot of the most popular infographics on this topic, pretty consistently business and or entrepreneurs and investing is the most significant or largest portion of the graph, with business representing 45% of the graph here and millionaires making their income from 30% investment. Then going around the graph, high-paying professions we're mostly familiar with, obviously athletes and celebrities, as well as doctors, lawyers, these high-paying professions. And then finally, 15% represented in this graphic from getmoneyrich.com at inheritance, meaning they were born with a silver spoon or a gold spoon if you're Ocho Cinco. And let's talk a little bit about how they keep and where they keep that income once it has been made. As I talked about in my last video about how rich people invest their money, most of rich people are, first I'll also explain what is rich. Well, let's turn to what Americans think rich is. We can start with what it takes to live comfortably, at least from Smart Asset. Smart Asset looked at how much you need to live comfortably on a 50-30-20 budget in every state in the United States, finding that it's cheapest in West Virginia at $80,000, and it goes as high as $124,000 for individuals living in Hawaii due to the higher cost of living. However, when Americans themselves were asked, what does it take to be financially comfortable? On average, they said around $270,000 a year. Gross before taxes is enough to be financially comfortable in the United States in 2025. You can see a breakdown by generation here, with perhaps no surprise, Gen Z having the highest amount of salary annually needed to be financially comfortable in the United States at nearly $600,000. Then when Americans were asked, okay, it takes $270,000 to be financially comfortable, how much does it take to be rich? A survey from Bankrate found that on average, Americans think you need about double that amount of money, or $520,000 a year, to be considered rich. Now, this is just looking at gross salary, and once again, here's a breakdown by generation. Here's a side-by-side comparison. Once again, to be comfortable, $270,000 a year on average, and to be rich, about double that amount, or $520,000 a year. However, we can also look at net worth, or assets minus liabilities. So when looking at net worth, how much do Americans think you need to be rich in the United States? To be rich or wealthy in the United States, Americans think you need a net worth of at least $2.5 million. So again, that is assets minus liabilities, or what you have and own less your liabilities. Americans think that you need about $2.5 million before they will consider you rich, according to this survey featured at Bloomberg. And once again, here's a side-by-side comparison. Who is rich in the United States according to the average American? You need a salary of at least $500,000 a year and or a net worth of $2.5 million a year. We can then compare that to the average salary that Americans make in the United States, which, as seen on the screen here, most salary peaks between the ages of 35 and 54, and you can find your age range as well as the median, average, top percent, top 10%, and top 1% based on your age. And overall, here's a breakdown of average salary by age range as well as household income. Household median income is $80,000 as of 2025, and average household income, again skewed by outliers, which is why most of individuals like to use median income, is an average of $114,000 a year. Again, just looking at net worth, here's a simple breakdown in column on the left side of what Americans think you need to be financially comfortable in the United States by generation. And on the right side, you can see it jumps or in most cases doubles of how much you need to be rich in the United States. For comparison, here's a side-by-side of what actual net worth is in the United States. On average net worth in the United States is about $200,000. Median net worth in the United States is about a third of that. Again, keeping in mind that averages tend to be skewed by outliers and or people who have $0 net worth all the way up to millionaires and billionaires, which is why most people think median income is a better representative of the usual person's experience in the United States. Here's a side-by-side comparison for you, and this average net worth does include primary residence. So now that we know what Americans consider rich, by way of reminder, at least a annual salary of $500,000 or $520,000 a year, or a net worth of $2.5 million, I invited two of my friends on who fit into both of these categories. And again, looking at the sources of income, I specifically invited these two millionaires on the show because neither one of them inherited their wealth. Jeremy, the owner of Personal Finance Club, made his first million by being in the business side or an entrepreneur. He built that business up, then sold it to make his first actually multi-millions. And then he moved into his passion, which he does now, which is actually personal finance. You can find him on Instagram at Personal Finance Club. And you can make a strong argument with hundreds and thousands of followers that he is also now part of the influencer group, which about 30% of young individuals want to make their millions as influencer. Teri Ijeoma has a similar story, but a different background. She actually started off as a teacher, then started following her passion, or she was actually in a toxic work environment, decided that she wanted to go and find another way to make income. She became a self-taught investor, made a course about her self-taught lessons, which she then sold and began to make over 40 million one year and is now a multi-millionaire. I have here both of their interviews and what they learned about becoming millionaires as well as investors. And as I showed here, that puts them in the two largest categories for how millionaires make their money. Here's what they had to say about making a million, investing millions, and what it's like on the other side.
Great meme account. I learned you actually helped me open an investment account with Vanguard, and Nice. It's like 5 slides. I've been putting it off for like 2 years because I built up, like many people, this story in my head, like, I got to talk to a financial planner. It's going to be so complicated. And one day you were like, how to open an investment account with Vanguard. I'll get that in the show notes for the people who want to do it. It took me like 15 minutes. The hardest part was I had to find a checkbook for my routing number. Yeah. And ultimately I was able to find it in the app. And so I made an excuse for 2 years, and so I appreciate you for doing that. And I looked in there yesterday. I dropped $1,000 in there just to, get it up and running. I put it off for 2 years, and it's like 1,100 now, which is pretty good because it's been open for about 9 months. And I actually forgot the password, so that's how active I am in there. And I want to get to the point where the business allocates money to it each month, $500 a month, which we'll get to, which is another meme that you have. Nice. So your course and platform is how to build wealth by investing in index funds. So why index funds?
That's a great story. Thanks for opening that account and saying it, because the world of investing is a scary place the first time you dip your toe in it. If you walk in and you hear about investing, there's images of people on the traders on the floor of the stock exchange frantically waving pieces of paper, and Bitcoin and oil futures and pork bellies and day forex and day trading. It's crazy, but at the end of the day, almost all that is total nonsense. If you read all the classic books on investing and really understand how to build wealth in this world, it's by buying the companies of the world that generate the profits of the world and owning them so that you get your share of those companies. And then the question is okay, well, which companies to buy? And the answer ends up after some research, it ends up being pretty simple, which is the market is efficient, which means all the sum total of human knowledge is priced into each and every stock in the stock market. And so a single person, me, anyone, professionals can't look at the stock market and decide which one to pick. So enter the index fund. It's just a simple, low-cost way to buy all the stocks, which on first glance, the first time you're hearing it, sounds a little crazy. But when you own all the stocks, you've guaranteed yourself your fair share of all market growth. Every single worker, from the janitors to the CEOs, is working to make you rich, and as those companies grow in profit, those profits are funneled back to you. And so what you did by opening a Vanguard account, putting it into a low-cost index fund, and just leaving it there, you saw going from 1,000 to 1,100 isn't going to change your life. It's a free $100, but that 10% rate of return, which is about it's what's called the compound annual growth rate over the last 100 years of the stock market. If you put $250 a month away over the course of 40 years, that's over $1 million. And if you want to get there faster, you put more than $250 in.
Yes, sir.
And this is the drop. Teri Ijeoma's VIP Trade and Travel Program is a self-paced course with over 100 hours of trading that helps everyday people just like you trade stocks for income. Welcome to the show, Teri.
Thanks for having me.
So In this episode, I'm just going to keep it very straightforward. The people are here to learn about the course. So this is Teri Ijeoma course review, and I'm literally just going to walk through it. And we'll start with trade and travel, what you will learn, how to pick companies, everything you need to successfully get started in investing, including opening your account, picking good companies, and placing the first trade. I guess my question there would be, how do we go about picking a good company? Like, what is a quote unquote good company?
Okay. As a trader, I'm looking at companies that are healthy. One of the myths is that traders, more active investors, we trade different companies than long-term investors. But the truth is, we're looking for the same healthy companies. I'm looking for companies that long-term investors would also find in their portfolio. I'm just trading in and out of them for income. So they're healthy companies. They've been on an uptrend over the past year. They have good earnings, a good forecast, but really solid companies that we believe in for the long run. But like I said, the stock price doesn't go up in one fell swoop. It'll come up, it'll go down, especially we've seen that in the beginning of 2022. So we just find really good entry points and really good exit points, but the companies are healthy companies.
And as we walk through this conversation, I guess I'll play which I don't like doing, the side of devil's advocate. And I guess my question would be, what do you say to that person who's scared to invest? So they've always got a problem for every solution, and really not even a solution for any problem. So how do you get that person off the bench?
Well, I think that's when we go into module 2, which is risk management, and that's like what I teach students the second week. So we're looking at how do you protect yourself from losing? And there are 6 things that I did wrong in the beginning that I now teach students how to do better. One of them is putting in protection, like putting in stop losses. That's an order type that'll take you out when the stock is going down, or even just your quantity size. There was one trade I took, I had 8,000 shares and overnight lost about $24,000 because I had too many shares. Like I already had put myself at too much risk. So there's small tricks like that you can help protect some of your risk and not be as afraid to join.
We've seen how millionaires make their money. And of course, this is just 2 millionaires of the thousands of millionaires that exist in the United States. But what I liked about having these guests on the show is that both started from a 9-to-5 and made their millions through their passion, and more importantly, have been able to increase and continue to make millions, now finding money and millions through doing what they love. With Jeremy teaching at Personal Finance, and Teri being able to travel with her trade course, Trade and Travel. You can find both what I would call influencers now on Instagram, and the full interviews from those clips below if you found those interesting. And by way of reminder, here's how millionaires make their money, and be sure to check out my other 2 videos about how millionaires invest their money.